The failed assassination attempt against Donald Trump was pretty shocking during the weekend, but it didn't panic markets today. There was a slight safe haven demand which helped the US dollar to gain some ground, but the market reaction was pretty soft and temporary. Of course, US politics will keep making headlines ahead of November's election, but this week the focus will be more on the economic calendar. There are a couple of Fed speakers scheduled to comment on monetary policy, including Jay Powell. Moreover, US retail sales are due this Tuesday, so that could also affect rate cut expectations. While in Europe, UK CPI inflation data and the ECB rate decision will be important for the euro and pound pairs. So at this video, I'll briefly explain my technical outlook on gold, euro dollar and pound dollar, starting first with gold. And US retail sales, well, the data have been slightly negative in May and in April. So if there is another miss in the data showing that US consumption is losing pace, that could increase the odds for September rate cut, which is currently around 90%. So if the data come weaker than expected, well, that could make a rate cut certain in September, and therefore that could help gold to move higher. We can see that from a technical perspective, there is a resistance around this dash resistance trend line near 2436. We have to break that in order to accelerate probably into the 2500 and 2532 area, where this longer term dash trend line coming from 2022 is located. If you look at the technical indicators, the RSI, the MACD, and the stochastic oscillator are all sloping upwards, but the RSI is and the stochastic oscillator are not far below their overbought levels, so downside correction cannot be ruled out. Now, if gold reverses to the downside, initial support could come near the 20 and 50-day moving averages near 2350. Slightly below that, I would also pay attention to this tentative support trend line near the 2335 level, a break of which could take us to the downside, could cause a sharper decline towards the 2277 and 2300 territory, where the lower boundary of this range is placed. And now turning to looking at euro dollar and the ECB rate decision. Well, expectations are for interest rates to remain steady, but the ECB tends to provide some signals in advance. So it will be interesting to see whether the ECB will inform traders about whether there will be a rate cut in September. Of course, the ECB also likes to keep some optionality in place, so it basically doesn't like to provide information about when and how it will cut interest rates. But overall, any signals about how soon a second rate cut could take place could basically cause some volatility in euro dollar. Well, euro dollar had an amazing session last week. It's trading near the June's high for 1.0915 at the moment, and near this constraining dash trend line. So a break above that could confirm additional gains, but there is another barrier between 1.0960 and 1.0983 between these trend lines over here. So that could be the next obstacle for the pair before the 1.10 for the 1.11 numbers come into play. Well, if you look at the technical indicators, well, it seems that room for improvement is limited since the RSI is near its 70 overbought level and the stochastic oscillator is also above 80. So again, here we can't rule out the downside correction. If that happens, then support could initially come around 1.0853, and then lower than that, the 50 and 200-day moving averages could support the market near the 1.08 number. likely canceling any declines towards the 20-day moving average at 1.0772 at the moment. In the big picture, of course, well, steeper declines could worsen the outlook once the pair crosses below this support trend line from October 2023, currently seen near the 1.0685 level. And finally, looking at pound dollar, well, UK CPI inflation data are expected to remain steady. The Bank of England has reached its target of 2%, but it would like to see more evidence that there is price sustainability around 2%. So if the data remains steady, that could motivate the central bank to cut interest rates as soon as August. And of course, weaker than expected data could also support this case, likely causing some negative pressures in pound dollar. While looking at the pair, well, the pair had an amazing session last week. It made a new higher high, very good, almost near the 1.30 level. And but looking at the technical signals over here, well, the market seems to be trading near overbought levels, so there is a risk for some stability or a downside to move. However, for that to happen, the pair, I believe that the pair should close below the 1.2960 and beneath this constraining ascending line in order to revisit the 1.2892 floor from Friday. Below that, well, we could see some consolidation around June's high of 1.2859, a break of which could take us down to the 20-day moving exponential moving average at 1.28, while lower than that, there is a more critical support region around this resistance trend line from May 2021 at 1.2755. That line had been blocking upside pressures during the previous months, so it could easily turn into a support territory, protecting the market from falling down to 1.2675. So overall, that's everything I wanted to share with you guys today. Thank you for watching and see you next week. Bye bye for now.